Good evening all, hope you're doing well. We're at euphoria again, so it is getting quite boring. The herd are just very quick to sell. We had that PPI data out earlier, and we had an initial reaction on risk appetite. The indices fell, but what happened is that as they fell, the herd had sold, and by that action, it pushed the price higher. I know there's other things going on in the world that's pushing price higher, but it just so happened to coincide with the retail guys shorting it at that precise moment in time. So is it a coincidence? It probably not, and it could all just be designed to punish the dumb herd. It's just at this point, it's just going to be quite a frustration that's going to be ongoing, and if especially if they keep selling, and it's going to infuriate and frustrate everybody because we as traders want to see normal price action. We want to see ebbs and flows. We want to see give and take. We want to see ups and downs. But at the moment, it's just up, 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 and it's possibly a good reason that we're continuing to go higher because we're risk on at the big picture, and on the 24-hour change, they keep shorting. So it looked like we might have potentially be turning yesterday, but it's now looking like that just erased whatever happened yesterday. So the SSI is minus 30. So that tells us there's 30 bears versus the one bull. Technicals really pumped, and the VIX got crushed. So if you remember yesterday, the VIX was rallying, but there was no really any real reason for it, and it could have just potentially just pumped in order to have a gradual decline, because perhaps this week is going to be a risk on week, and they just basically positioned VIX really nice and high in order to get a good entry for a sell. It's quite possible because we're going to be risk on, I think, because of the screen. So I think what will probably just be, I know I keep saying this every day, it's going to be a short video, and then it turns out to be like a 40-minute video. But really, there's not that much to say. All I need to talk about is just the herd shorting, but we can see that on the dashboard. So come across to the market scope, and they'd sold right on the Dow Jones. This is the candle that I was on about. Big buying pressure, big wick underneath. Why? Because they'd sold. Big buying pressure, naughty, 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 and then big pump. So it's trying to throw you off the scent. This 4 hours after, it looks like it could be potentially bearish, and we just had this humongous risk on pump. This is horrendous. It's really horrible, isn't it? A bit of supply overhead, but the fact that they'd sold is now we created a demand below, and it depends on the conviction of their selling. Will go up higher. Okay, so, and it's just really it doesn't really need to be much said. It could be a short video. Like they'd sold. What happened here? Boom, and DAX. And really, today we had a -1R, so that's okay. On the robot, it's not fantastic, but at least it's only a 15 pip stop loss. So likewise, here, not much reaction because the herd here have been squished, and we're only talking about the most stubborn of the apes remain now. So they're likely not going to be phased by a move like this because we're just dealing with I was going to say brain dead apes, but it's not very nice. Someone who's very convinced, very stubborn, that might be the better word. They're very stubborn bears. And so that's why we didn't see a huge reaction. And we've really only got a very small amount of those stubborn apes left in the equation. So we couldn't really see too much for change because there's not much room left to go. And then I guess gold. And not GU. I suppose we can quickly look at GU, see what happened here. Look, we got the buy, and of course, massive move there. But that's the buy setup. That's the sell setup. Great for a scalp, very nice. And then you're looking to try and get a good risk to reward, which you would have got on that move. and then you're looking for a good risk to reward on the upside. So let's look at gold, and then we'll just wrap up the video. So it will be a quick one, and then tomorrow we'll just wrap up on the CPI. You know, after all that fireworks and stuff, and once the dust has settled, then we should hopefully have a clearer picture. But I can't see why we're not going to be risk on, to be honest with you, and indices are going to continue higher. Gold, they'd sold quite heavily with a lot of conviction, so pending that they resume that conviction of selling, we can go up higher. We are going slightly sideways, so they're rethinking their positions. So I'll just report back tomorrow with the robot update, and just so you know, also I've hurt my wrist because I've fallen off my bike. So I'm resting a little bit today, and it was a bit of a manic day today because I ended up going to the doctors because I thought I'd actually I don't know what happened, but the sprain in my wrist was so painful. I did a walk in in the A&E, so I've got a strap for that now. So I'm going to be resting a bit, and it kind of hurts with my hand on the mouse. So if I'm not around tomorrow, I'll be there for you, but I probably won't be doing the trading because it actually hurts having my hand on the mouse. So I'm going to have to maybe take some painkillers and maybe go back to the doctors. It could be that I might be fractured it or something, I'm not sure, but it really hurts. So I'm going to take it easy now, and that's just going to wrap up a quick video, and I'll be back tomorrow night. And fingers crossed my wrist isn't actually that bad, but it was quite a nasty fall that I had. So I'll speak to you guys soon. Remember to trade safely. Risk disclaimer, for anything that you do in the financial world is that you will need to use very strict risk management. So if you don't have the risk management in play, you're pretty much gambling, okay? And we really want to be looking at trading, and we want to be looking at risk to rewards. And in order to get a good reward, you need to define your risk. And if you don't know where your stops are, if you haven't defined your risk, then you could end up losing all your capital, okay? So you need to know where your exit is, and then by knowing that, then you can forecast your profit. But if you're entering willy-nilly based on some information that you've found on the internet and you've entered without knowing where your stop is, you're going to encounter huge losses. So just to say is that it carries a huge level of risk, and it may not be suitable for all investors, and past performance is not indicative of future results. Okay, so it's a quick disclaimer there.